Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for December 15th, 2016. We have our Fed day action out of the way. We saw price trade in a range that was basically mirrored the previous session's range. And for the most part, we're kind of hanging out here right around the previous week's close and high, and we're just chalking around it back and forth. Currently, bears are keeping the previous week's close and 57s offered at the moment. That doesn't mean that that's going to be the case throughout the day, but it's very difficult to tell at the moment what exactly is going to transpire here. What we do know is we pushed through 2214 and zoomed higher, leaving behind a very narrow, imbalanced profile. And what I mentioned before is the only way to increase that is to retrade it back down, retrade it back up, fill it out a little bit, leave behind a natural LVN. So we could be looking at a market right now where we basically flow down, flow back up, flow down, flow up, and build out this distribution above 2214. I did mention before that any return, any pullback toward 2214 could be a solid buying opportunity for another push higher. We do have more upside key levels to watch for. The ultimate upside key level is going to be 2376. That's a big time target. That target corresponds to this 2240 level. So we could have another round of strength that takes us toward that target over time. Not anytime soon, but this could be over the next few months in the first quarter of 2017. So there could be a lot more upside here, but it all kind of depends upon holding above 2185s on a longer term. I think today, more specifically, again, could be an inside day or kind of a digestion day ahead of the big move, a bigger move Friday. So just keep an eye on 2240 on the downside. Above 2257 could retest recent highs. Looking at the intraday time frame right now, you'll notice right here, let's see, let's bring this up. Here it is. For the most part, prices have traded in a range back and forth throughout most of the session, a flat VWAP. But recently here took VWAP offered and dropped to new lows just below this low here. This could be a short-term fade opportunity back toward 2258 to take out these highs, and we could be back down again. So right now, again, it could be a fade the edges type of environment, at least early in the day, and that could allow us to fade back and forth, at least the inner 10-point range at the very least. All right, let's take a look here at crude oil. Here's crude. One thing with crude oil is we had a significant rejection tail recently, and that rejection tail occurred off of new highs, right? 54s went up to as high as 54.51. So it was a big time rally. Boom! This is where the major absorption occurred off of 45s. Big time rally. Price pulls back toward 50, and then another huge move. There's a big tail that comes in right there. That's called the rejection day. And after that occurs, what you have right here is the midpoint of that day becomes an interesting area here where the best bulls will be looking to defend after the rejection day. That's where we typically want to see bears defend, rather. So the best bears would be looking to defend in this zone. This is typically where we want our entry, is right around this area here. And then from there, you're looking for a continuation downward. You can see that was the best entry on the board. We talked about it heading into this digestion day after the rejection day, and it occurred perfectly. You can see the big push down we had. We talked about filling the gap back toward the previous close, and if that occurs, bears would look to keep the previous close offered for a shot at pushing price into the previous week's low. So the previous week's low here is going to be 49.59 and 49.61, right in that area. So we could be looking at a push into that area by the end of the week. All right, let's take a look at the intraday time frame. The fact that we're trending downward, the previous week's close is offered. It's all very important. So here's the previous week's close, went offered here, and then pulled back. Here's another defense, and now new lows. 50 half, very important here, short term as a key level. But again, as long as price remains below 41.50 for the most part, more overall weakness could be seen toward that previous week's low. So right now we could see short-term strength that brings us back to 41.58. A push into this area would suggest a return back down. That's the trading range right now. Short term, as we trend lower, all pullbacks are better selling opportunities in the downtrending market until we hit the previous week's low. Above 41.58 would tend to squeeze here back up the ladder toward 52 and 52.78. All right, let's take a look now at gold futures. Here's gold. We spent quite an amount of time talking about gold in the trading room yesterday because we had a great sell opportunity. This is something we talked about here with gold recently, is it cannot find a bid. Every time it finds a potential rejection point in the chart, absorption occurs, and then bears went out anyway. So right here was a potential rejection. We were holding that lower edge for a day plus, and then the stops came out. And what I mentioned in the pre-market report yesterday and also to our trading room was right here is the best point to get short, is when it's rejecting these price levels up here, because that will give you momentum in the move for a shot at breaking those lows and breaking through the opposite side. Our target yesterday was 1142.80 off of this rejection, and then you can see we've already reached the 100% expansion target already on a 2-day basis. So what we talked about in the room was after the absorption, you have a 2-day run of the stops. Absorption, 2-day run of the stops. This is day 2. This is day 2. So we may begin to see a low form down here and then another absorption form over the next couple of days. So just keep that in mind. But a very nice flush of the stops to the downside. We've reached that 1126.90. That's a target that some of those savvy traders in our trading room had on the boards as well. So very nice move from this impulse range. Now we have to see if another absorption signature develops off these 1130s. All right, let's take a look at the NQ. Here's the NQ. Not a whole lot to talk about here. The previous session, what we talked about was this midpoint being defended by bulls. So you can see it was the low of the day, so it offered a great opportunity to defend. But that's about it. Right now we have an inside day that developed. We have a double inside day that's developing now, obviously heading into RTH. But any failure to hold this level right here, that's basically 49.10, would suggest a rotation back toward recent lows. So these recent lows here, to take out those lows would be about 48.40. That could be a quick short-term push back down. Additionally, this is the previous week's high price. So if you can't hold above the high, you likely rotate back toward at least the midpoint of that range, which would be here, with a shot to go all the way across the range. So there's a few things here to watch out for. But this is 49 to 49.10 is the key zone to defend. Bulls want to keep it bid. And if they can keep that area bid, there's a shot to squeeze this thing even further to the upside. The next major target above, major target above is 40 half. So 50, 40. So 5,040 is going to be the next zone to reach for if price can continue to have 49's bid. So 4,900 bid takes you to about 50.40 on the next run up. Any failure to hold 4,900 could rotate you easily back toward 48.06 half, with a potential to see a move across the range a little bit. All right, lastly, let's take a look at the intraday time frame here. There it is. So here's the intraday time frame for the NQ. Not impressive at the moment. What we had was a coil up heading into the 1 o'clock announcement. Then we had a great trading range that developed after the announcement, and then we went back to a tightly cooled range. So right now, not a whole lot to do. I mentioned 49.10s is the zone to defend. We talked about that in our trading room. 49.10 to 4,900 yesterday. 49.10 was it. So right now, that's still the LVN to watch. So if price drops into this area, look to bring it back up toward 49.28 and perhaps 49.50. If price rallies to the opposite end of the range up here, say 49.50, 49.60 in that zone, it could be an opportunity to bring it back down short term as well. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.